Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Morgan Slade. Remember, new shows are posted every Monday and Thursday. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with the CEO of CloudQuant, Morgan Slade. Morgan and I chatted about artificial intelligence in the market. We talked about news analytics and trading the news. He gives us his thoughts on the current liquidity in the market, how data scientists find alpha in data sets, and he shares with us his process for building a strategy. Without further ado, let me take you right to the interview with Morgan. Morgan, thanks for coming back on the show. It's always great to hear from you. You always got something really cool going on, and I'm excited to hear what you're up to with CloudQuant. But can you give our audience a quick refresher on your background and what it is that CloudQuant does?
Sure, absolutely. I've been doing quantitative trading for almost 25 years now. I've worked for a number of larger hedge funds in New York, Milburn Richfield, and Carlson Capital down in Texas, and Citadel Investments here in Chicago. I've mostly been focused on multi-day, medium time horizon strategies recently, but I also have about a decade of experience in high frequency market making. At CloudQuant, we focus on leveling the playing field so that we can have as many different crowd researchers contribute to our investment process as possible. We do this by offering a website where they have the same tools that we have to do both intraday, fairly high frequency trading strategies, as well as longer time horizon strategies using alternative data sets like social sentiment data and new sentiment data.
Thanks, and as I've said many times before to you, you're always ahead of the curve, and that's why it's always so much fun speaking with you. You're always doing something well before a lot of other people are doing it, and as of late, I've been hearing you talk a lot about AI. Why have you been talking so much about AI lately?
Well, I think there's some early adopters. There's some established players who have a lot of resources who aren't really talking too much about it, but it's pretty clear that they're investing pretty heavily in learning how to use it. With them, in many cases, the more progressive ones would be using that to gain a further advantage. They've probably been using that for a while, whereas others who had more traditional strategies are now trying to get into the mix. They're trying to hire data scientists and figure out how to use it to reshape and re-engineer their current existing process. I think CloudQuant's an interesting situation in that it is a startup, but it's born out of a trading firm that's been around for a quarter century, doing mostly intraday prop trading and things like that. And we've taken that skill set and those tools that we built and put them out there for other people to use. And so I think AI for us is a core thing that we use every day. It's also something that is being utilized in a lot of alternative data set creation. And so you see AI algorithms analyzing earnings transcripts for you. And so we have a lot of derivative data sets that come from an underlying AI process that somebody else creates. And so we have a lot of specialists in the industry who are coming up with data sets that are generating signals that can be then fed into to other AI strategies and used for trading. And if you think about it, there's this kind of specialization going on. We recognize that we only have a finite number of people in-house to work on these things. We are hoping to leverage our crowd researchers as an extended part of our team. But even with that, with those thousands of people available to work on various trading signals, there's still so many questions that need to be answered, and so many things that we can't do because we don't specialize in them. And so I think not only is AI increasingly being adopted at the more progressive firms, but also it's being adopted in the data vendor space and with a lot of new startups that are creating new data sets. And I think a lot of the alpha that we've seen in the last year has come from a lot of these new data sets that essentially give you a way to swim upstream or a way to get at revenue growth or earnings growth a little bit sooner than the traditional data sets, and essentially make you look really smart when in fact maybe it's a new data set with an AI process that's compiling it into something actionable and then being sold to, a hedge fund for a hefty fee.
Now, look, nobody can predict the future, but how much of trading, let's just say in 5 years from now, do you think is going to be AI?
I think a lot of the things that we've seen in artificial intelligence over the last 20 years are really kind of engineering innovations. We have seen a lot of trial and error and a lot of periods where people felt like artificial, peak AI is here. And they happened in the 80s and the 90s, and then finally, with cloud computing and some other innovations having to do with deep learning, we started to see some things we had never seen before that were perhaps more reminiscent of the capabilities of what a human can do. We're still a ways off from where they completely take over at this point. As I think I heard an interview by James Simon, and somebody asked him about are algorithms taking over the world? Is AI going to take over the world? And he said something that I completely agree with. He said, well, no, they kind of do what you tell them to do. And that's right. Whether it's stat arb in the 80s and 90s, or whether it's high frequency trading after 2000, or whether it's artificial intelligence investment algorithms, now these things do what you tell them to do. And so as long as you understand your process and you've practiced it and you follow a process, it is going to give you better insights, but it's not necessarily magic. It's not going to take somebody who doesn't know how to trade stocks and turn them into a stock trader. And so at the end of the day, it's still people who have to drive the ship, and it's still people who have to write the code that does the right things. And so I think that's something that sometimes gets lost on these conversations, is that we assume that somehow humans are being replaced. No, it's just different skill sets and still the same ideas about what moves markets. It's still about mergers and acquisitions. It's still about figuring out what earnings are going to look like. It's still about looking at valuations.
Yeah, I agree with a lot of what you just said. And I guess the question I probably should have asked you first was, how much these days do you believe that trading is being done through the use of artificial intelligence?
Well, if you listen to our friends at Move 37, who is it's a fund of funds that focuses on investing in AI funds, they'll tell you there's only maybe a handful of firms that actually use a completely machine learning based strategy. And I would say that that's my experience as well. I think that a lot of people have bits and pieces of what they do that they've automated and that they use AI for. But for the most part, the existing firms are afraid to kind of upset the apple cart. And so they're not going to drastically change how they do things overnight. It will take some time. And to some extent, you really can't look to those firms to be the leaders because they have too much to risk. And so it's really more startups like CloudQuant Capital Management that are going to be on the forefront for trying new things and being innovative, because while we have a lot of trading experience, we don't have the concern about upsetting the apple cart because we're trading our own money, and we haven't gotten to the point where we have to worry about earning $100 million a year and things like that. So.
Now, since we last spoke, you guys have some new partnerships. One in particular that caught my eye was Raven Pack, because I saw a YouTube video on what they could do with data analytics, I would say about a year ago, and that really confirmed why I don't point and click on news anymore, because I just don't see how a person can digest news as fast as they do and react off of it. I mean, of course, unless we think the algo's got it wrong, and then it creates an opportunity to get in, which is, obviously where I always feel like the trader who point and clicks always can always find an edge some way. But in terms of digesting news when things come out, obviously the machines can do it so much faster than we can, and then put it across all these different asset classes, right away. So talk to us about what you're doing with Raven Pack, and I know there are also some other data partnerships. So talk about those as well.
Sure. On our platform, we want to provide a variety of data sets. So one of our partnerships is with Raven Pack, as you mentioned. Raven Pack provides news sentiment for pretty much every major news source. I mean, they have, I believe, hundreds of thousands of sources that they're scanning in real time or near real time. They're scoring this using natural language processing, and then they're publishing out the results on a feed. We also have a partnership with Social Market Analytics, which is based here in Chicago, and we get our fundamental data from Morningstar, which is also here in Chicago. Raven Pack is actually based in Spain, so we see them at conferences. We see them speaking at Eagle Alpha conferences and other alternative data conferences. And everybody's always quite jealous that they all live on the beach in Spain. But they do some very serious AI work, and they've been in the industry, working on this. I remember speaking to them when I was at Citadel, 10, 15 years ago. And so they've been doing this for a very long time. They're very good at it, and it's a great data set for us to have. They have different channels in their data, and they label them as different events. And so if you're somebody who's trading mergers, or if you're somebody who's trading buybacks, or any type of kind of corporate event that you can think of, they actually have kind of a sub channel set up for each one of those, and they make it very easy for a data scientist or a quant trader to come in and sift through that. If you're using the raw data, if you're using their dashboard, which they have a GUI as well, if you're using that, then you can, there's a lot of prop traders that use that to help out with their trading. You can use it both offensively and defensively. Some of the things we learned from those types of data sets are, they say bad news travels fast, and when you look at the research, it actually turns out that bad news travels fairly slowly. So if you're looking for shorts, the chances are you have a fairly long period of time to put the trade on. And then another thing we learned from research is that usually no news is good news. Well, that's not actually right, because when you have news, typically your stock goes up, and so no news is bad news. You actually want to have news articles coming out about your stock, even if they're neutral. Your stock will still go up. So those are a couple of things we learn about kind of human biases just by looking at the data empirically, and having a product like Raven Pack or Social Market Analytics available.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Okay, I want to pick your brain a little bit about trading the news, because for years of my career, when news came out, typically that was really good for me, especially data points. Unemployment was always a good day to trade. Not anymore for me, really. But a lot of the headlines and a lot of the news days were really good trading days. Not always, but a lot of the times. And the reason why I say they're not as good for me anymore now is because the machines have won the race, the speed race. Something comes out, unless I'm there exactly at the moment, I see the headline and can react to it in a market that I'm trading, it is just a waste of time. I really don't focus any energy at all on trying to trade any news events or data points for that matter. What I look for now is the slippage after a data point, the slippage after a news headline, because I think that the machines way overreact a lot of the times, and it creates price opportunity to get into trades after the fact. So are there programs out there being built to trade the news more tactically as opposed to just the race for speed, to be first in on a headline?
Yeah, no, and I think obviously your trading experience has taught you to to be able to identify these different time horizons that are involved in something playing out. I mean, even you look at a lot of research on earnings, for instance, which is a particular type of event, and you see that there's something called post-earnings drift that has to do with the fact that not all players are high-frequency players or market makers like you were. They can't react that quickly. And so a lot of this asset flow in and out of names takes some time. But you're right. The amount of time that it takes to react or the amount of time you have to respond to something that's obviously good or obviously bad for a name, is much shorter now with high-frequency players getting access to news feeds that have sentiment. And now, they may not be looking very deeply. They may be just looking at the headline, or they may just be doing a very crude analysis of whether it's a good or a bad thing. It's when you start thinking about more nuanced things like relative value. Okay, so this is bad for GM, but GM's moved a lot. Has it really kind of relative to Ford gotten out of line with where it should be? That type of thinking still requires people to look at it and still requires more context. And so there are people starting to build models around kind of the longer time horizon valuation idea. And but that usually also involves other types of data sets. Can you make some statement about what you think their revenues are going to be by looking at their digital revenue footprint? Can you bring together a couple of different types of data sets to essentially do what a fundamental analyst does when they pick up the phone and call somebody at the company in investor relations or a corporate officer and ask them some questions? So I think at the end of the day, we're trying to bring all that together through data sets that weren't available before. And so I think one of the interesting thoughts is, okay, so we used to talk to people on the phone. We used to listen to chatter on the floor. What is the analog in the alternative data world? What data sets should I be looking at that are going to give me the same kind of information? Maybe there's more of it. Maybe it's more frequent. Maybe there's better coverage. I spoke with a vendor today who said that they map something like 250,000 Twitter accounts, and they are able to predict, about 30% of all M&A activity before it happens. Why is that? Well, at the end of the day, they're crowdsourcing their product to individual people who they've identified who know something. And so, as scary as this AI stuff may be, at the end of the day, most of the useful stuff still relies upon people, whether it be crowds of people, like we do at CloudQuant. We rely upon crowds of researchers, or whether you're a data vendor and you have, hundreds of thousands of Twitter accounts and StockTwits accounts that you monitor. You're still relying upon the wisdom of the crowd, just like you did on the pit.
I want to move on and talk about a hot topic in the industry right now, and that is liquidity, lack of liquidity. Seeing article after article written about this in both futures and stocks. I can't comment on what is going on in the stock market because I don't trade stocks, but futures. I've been trading futures for a lot of years. Started in the pit, moved over to the screen when the E-Mini S&P started. Been watching that E-Mini S&P since it began, and traded a lot of fast markets in my day, seen a lot of wild times. And I have to say that what I'm seeing right now doesn't concern me at all. I feel like this is exactly what we've seen in the past. Now, I can't argue with some of the stats out there. There's less on the bid or offer now than there was during X times. Okay, that may be the case. But I can tell you this from a field perspective, someone who's watched these markets and traded these markets pretty heavily over the years. And I haven't seen anything that is different. But I want to hear your thoughts. You've been around a long time. You've traded these markets. What are your thoughts on liquidity right now?
Well, I think that it varies day to day. If there's new money being put to work, then that kind of makes everybody happy, and people aren't as risk averse. But in the environment we're in, depending on the day, you can certainly see that stocks or futures run, and it's a fast market all day long, and there's really not much you can do about it. I think one of the challenges that we have to think about is, what are we going to do when all the high frequency traders have alternative data, and they have the ability to kind of see what's going on with the fundamentals of companies, and they start behaving more like fundamental traders. And then we have long-term investors who kind of have a much longer time horizon. I think there's somewhere in between where there's some opportunities. And I think that we have to essentially try and figure out, which one of these buckets you fit in, and become very good at that. But I think the current market environment does not seem as healthy as it could be, because I think banks have reduced their balance sheets. So there's not a lot of risk being taken there. I think a lot of the CTAs have had many years of difficult performance. And so there's not a lot of kind of longer term momentum money there. And I think that people haven't quite figured out how to use alternative data to price futures yet. But I think that's on the way, with the satellite data and the data coming from tractors and all sorts of other data sets. I think understanding supply and demand accurately enough to figure out, what the fair value for, coffee futures is not so far off, or at least being able to do it better than we do today. And so I think there's some opportunities with the new AI and alternative data sets to, essentially build new models that have never existed before, and potentially some of that liquidity comes back. But that's the only silver lining I see, because it seems like everything is just more competitive and faster every year that goes by.
Well, as usual, it's always great to hear your insight and your perspective on things. And something else I'm curious about is how the industry is using data scientists to find alpha in data sets.
How it's done is not as interesting as the fact that it's really nothing new under the sun. If I told you, hey, I'll tell you what, I can describe to you, how the crop is going in Kansas City wheat. Would it be helpful to you in terms of coming up with a trade that you want to put on? You'd say, of course, that'd be great. Is it legal? Yes, it's legal. It's just data from fields or from tractors or from some satellite feed. So then, can you figure out to do with that? Yes, you can. So this isn't really anything new. This is just doing things that I guess probably couldn't have been done before because the data wasn't being collected. And so there really is an opportunity for experienced traders to get involved in that space, I think, and teach the younger kind of data scientists how to apply the data set to make money. Because a lot of times that's the disconnect. If it's not an obvious thing, they can't connect the dots because they don't understand the fundamentals of how things are priced.
With all of the knowledge that you have on all the different things that we talked about here today, how do you tie that all together and then go about building your strategy?
Well, the way we look at it is we first do a price prediction for to decide whether it's a buy or a sell or a do nothing. And then we have, if it's just an individual strategy where there's no cross-sectional covariance with anything else. Then we probably have some historical kind of risk management that we do, and then we figure out how to execute the trade optimally. Many times our strategies involve kind of relative value or at least cross-sectional risk components, at which point we have to, kind of compile all these signals to buy and sell together, and then, taking them all into account all at once, decide what kind of portfolio to put on. So we have those kind of two different types of strategies. But we break it up so that the trading signals, whether you're doing a cross-sectional or an independent strategy, they can come from anywhere. In fact, we want them to come from crowd researchers because there are something like 1,500 alternative data sets in the world currently. Eagle Alpha says there's going to be 5,000 within 2 or 3 years. And if you look at how many actually have people looking at them right now, it's probably about 50, because there aren't enough analysts on Wall Street to look at all those data sets. So we're going through a revolution of alternative data and AI right now. It's really pretty remarkable. And we know that we can't do it all, and we know that nobody else thinks they can do it all. And so that's why we created our platform, to make it so that we could leverage the 25 to 50 million data scientists in the world to try and get them to help us out with this monumental task of sifting through all this data to try and connect dots to figure out what trades to put on.
Love this conversation today, Morgan. Where can people find you on social media, preferably Twitter, and give us the website to check out?
Sure. I'm at jmorganslade on Twitter. We've got CloudQuant on Twitter, and our website is cloudquant.com.
Morgan, thanks again for coming on Futures Radio Show.
Love it. Thanks.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.